Welcome back to The Price of Business. I'm your host, Kevin Price, talking to you about you and your business. Glad to have Jane Bryant Quinn on the program. Really been looking forward to this. A best-selling author, Emmy Award-winning journalist, and really a great influencer when it comes to understanding the financial dynamics of the world in which we live in and the challenges that we all face. And welcome to the program. How are you?
How are you, Kevin?
Very glad to have you on the program.
Thank you.
Tell us a little bit, first of all, you spend a lot of time now writing for AARP, correct?
Yes, I do. I have a monthly column in the AARP Bulletin, but also, more importantly, I've just brought out a new book called How to Make Your Money Last, the Indispensable Retirement Guide. And it's directed to all those people who are planning retirement or newly retired and are worried about the possibility of outliving their money and what they can do to feel more secure and feel comfortable that they can make their money last for 30 years at least.
Yes. Real quickly also, I do want to mention your the best website for people to go to get more information, which is
JaneBryantQuinn.com.
JaneBryantQuinn.com. So, what was the approach, and how is this book different from other books in the same space?
So many retirement books focus on where you should live and the things you should do to make yourself happy and investing. They have sections on retirement investing. But, there is actually no book on how you turn whatever money you have saved or invested into an income stream for life. And so my focus is how you take whatever assets you have accumulated, plus your Social Security and pension, whatever you have, and create for yourself what I call a homemade paycheck so that the money will last. When you're saving money, all you think about is more when you're building up a retirement pot. But once you pass through retirement doors, that pot it has to be parsed out over the rest of your life. You don't know how long you're going to live. If you're married, you don't know how long your spouse is going to live. And we're all living much longer than we used to. At 65, life expectancy for both men and women is in the late 80s.
Yeah.
And that's a long time. It
is a long time. It really is. Meanwhile, the challenge of accumulating wealth is greater now than ever, at least through traditional means like savings type elements, if you will. And in fact, I was just reading the news this week, the possible of a negative interest rate, which in Japan, that's translating to have to pay money to keep your money in the bank. So it's pretty dicey out there.
It's very dicey out there, and it's one of the reasons why people should be pre-retirees and retirees need to be investing in equities. The old way of saying, well, I'm going to retire and then I won't touch capital, I'm only going to live on my income. The answer is, excuse me, what income?
Yeah.
And the people they look at the stock market, what's happened this year, and they get scared and say, maybe I shouldn't be in stocks. But people at 60, 65, 55, even 70, you are still long-term investors. You're going to live another 20 or 30 years. And the idea that somehow because you're that age you should pull back and be all in bonds is nuts, or even substantially in bonds is nuts. Over the next 15, 20 years, the world economy will grow, the American economy will grow, their stocks will grow, and to not necessarily individual stocks, because you never know which companies will succeed and which will fail, but talking about a mutual fund that is linked to the stock market, an index fund, this is really almost a guaranteed gain over 10, 15, 20 years for people trying to build money for the second half of their retirement.
So you're actually very optimistic, as far as the big picture goes.
Yes, I am. I'm not optimistic for tomorrow or next week, but I'm optimistic over a long-term period. If you look at the stock market average, what is the average time for you to have a peak, then to go down to the trough and go back to the peak so you've got your money back? The average time is 29 months. Now, when you are planning for retirement or newly retired, you have 29 months to wait. And the idea of all of a sudden pulling out of stocks because you had a bad 2 months, that's nuts. And so the longest period that it has taken for you to get your money back, going all the way back, the longest period, judging by the S&P 500, is 5 years. That was 2000 to 2006. Shortest period is just 9 months in 1998. You are a long-term investor, and you need to keep thinking like a long-term investor and not like somebody who's going to be scared out of the market in just because a couple of months.
Best-selling author, Emmy Award-winning broadcast journalist, or Emmy Award journalist, rather, and just delighted to have you on the program. We're going to continue our discussion with Jane Bryant Quinn. Meanwhile, learn more about her at janebryantquinn.com. And remember, the show continues 24/7 at priceofbusiness.com. More for you after this.